Hey, how's it going, everybody? Thanks for tuning in. If you're new, be sure to subscribe to our YouTube channel to stay updated on all of our content. So it is virtually impossible to check any social media platform without seeing an article discussing non-fungible tokens, better known as NFTs. With the rise in cryptocurrency popularity, driven primarily by Bitcoin's rise to prominence, NFTs have become one of the hottest topics on the internet. But what are they and how do they work? Let's break it down. An NFT is a digital file owned by a specific owner, and verification of ownership is recorded on a blockchain. The uniqueness and authenticity of this digital file can be verified via this blockchain technology. For those who may be unfamiliar with the concept of a blockchain, this is essentially technology that records transactions via a digital ledger. In the case of an NFT, the identity of the specific owner of the NFT is recorded within the ledger, and this information is readily available and cannot be modified unless the NFT is sold to another person. At that point, the transfer of ownership to the new owner is recorded on the blockchain. What makes these NFTs so interesting is that the technology can be applied to a variety of digital assets and collectible items. For instance, if I was to purchase a Tom Brady sports card from eBay, I have to trust that the sports card I'm buying is authentic. I also don't know who owns this item outside of their eBay username. I don't even know where that individual purchased or found the Tom Brady card. As an avid Brady fan, I may not care about these facts and I'm willing to take the risk. But with NFTs, sports card sellers could create a digital file that represents a Tom Brady sports card, and the ownership history, authenticity, and uniqueness can be verified via the blockchain. This is just an abstract example of NFTs in action, but there are already artists and creators making a killing off of this technology. An artist could create a specific digital piece of art and upload the file to an NFT auction marketplace where potential buyers could bid for the digital art. Last week, a digital artist by the name of Beeple sold a piece for $69 million. This took the entire industry by surprise, and many people could not believe that someone would pay that much money for a digital piece of art. The NFT art piece sold by Beeple was one of a kind, and its uniqueness drove up the price. The current financial environment has been turbulent to say the least. Interest rates are at historic lows, and government has approved another $1 trillion COVID relief bill. As a result, many investors are looking for unique stores of value to preserve their wealth and earn returns. Despite the speculative nature of NFTs, people are flocking to purchase these digital assets with hopes of the values increasing over time. Some financial experts are calling this NFT craze a bubble, but I do think the NFT market could create a unique opportunity for collectibles to become digitized. Individuals collect all sorts of items like cars, physical artwork, and even sneakers. Due to the fact that NFTs are digital and have no actual utility within everyday life, it is difficult for opponents of the technology to support the trend. Regardless, it will be interesting to see how the NFT market continues to grow as more investors pump money into the items online. 20 years from now, NFTs could become commonplace within the digital community, and this video will mark an important moment in world history. So I hope you all found this episode helpful, and be sure to stay tuned for more content at www.simpme.com. Thanks.